Okay, we're going to try and do these more regularly, focusing on, weekly readings and topical stuff and whatever. We'll call it, Friday Sharpeners or something like that. Anywho, there's probably nothing more topical to talk about than AI and the impact that it might have on, a lot of the businesses people own. And it's like the ultimate cocktail party conversation. And, truth is that no one really knows. And there's no real choice but to just, keep pretty topical, keep on top of what's being, of developments. There's probably like some very smart AI researchers, etc., who have like a good line of sight into, some of the products that are coming down the pipeline. But, I think not sure how many people 3 years ago would have thought like how important or the way in which that some of this agent technology that's being dropped would have come about, how important it would be, and maybe how accessible it would be. Even someone like me has been able to use Claude, and I would be like a last adopter of every technology there is. So, it's like an interesting time. But putting that aside, I've there's been some really interesting writing about the topic, certainly in the last couple of years. But as some of these new frontier models like Mythos and these discrete pieces of functionality within the LLM, the consumer facing LLMs, I think it's probably the clearest, you know it's the clearest in terms of how much evidence, physical evidence you can see in people adopting them, how the technology is, getting into the hands of the everyday person. And certainly, if you're talking to a lot of enterprise businesses, even small businesses, small groups of people, people at startups, you're starting to get like a pretty decent feel for how some of this stuff might evolve. And it feels like, the kind of like 2022, from when the first consumer, ChatGPT product dropped to like the end of last year, it kind of felt like these LLM chat models were kind of getting just progressively better over time. And then, kind of like as the agent stuff has, it feels like there's kind of like a big inflection point there in terms of, not just people ideating and speculating on what might come out of it, but like tangible things. And I think it's a pretty good bellwether when I've adopted something because I'm like the last person to adopt anything. So here we are. But I found a couple of things like pretty insightful. Um, Obviously, Ben Thompson's Stratechery, one of the absolute goats. He's been writing quite a lot about this, but there was a really interesting article last week called Mythos, Muse, and the Opportunity Cost of Compute. And it's a great read. So I'll drop the link in the show notes. And basically, he's responding to an article by Doug O'Loughlin, who's a uh, who's a subscriber. So big shout out to Doug. But he's obviously been writing about semis and AI and technology more broadly and stocks for a very long time, and he's kind of like a central character in that these days. Anyways, you don't need me to tell you that, but basically he wrote an article which was basically like an abnegation of aggregation theory, which is like the key idea that Ben Thompson became famous for some years ago. And in Doug's original, in Doug's note, and then in Ben's response, basically there's a bit of back and forward between sort of like the end of the 2010s era tech scene, which aggregation theory, which is basically, and I'm probably going to butcher this here, but like the very short-winded version of it is that in the pre-internet era, people got competitive advantages and monopoly profits through controlling distribution channels. And then in the internet era, people have gotten to a much stronger competitive position by aggregating demand. And so these big networks that have been built up by people like Amazon and Google and Facebook and you name it, the big, the large technology platforms built very large businesses off building these networks, that were characterized by something called zero marginal costs, which is, it doesn't cost a whole lot of money to, for an additional person to open a Facebook or Instagram account. Once you've got the network going and you've got the, relatively light fixed costs in place, things like having a data center, people having access to electricity, paying for software engineers and so on, you really get these huge distribution effects. And, that's why these companies have been able to build extraordinarily profitable businesses, mostly on the back of advertising. But for someone like Amazon, they were able to have their first customers finance customer 3, 4, 5, 6, 7, and then at the extreme you have like large numbers of customers basically funding your logistics and infrastructure build out, and then over time they've kind of moved to different kinds of businesses. But that aggregation in the first part is what's financed that. So there's a bit of back and forward here about where the new technology paradigm that we're in, which is a bit different from that, in that these artificial intelligence models rely on a tremendous amount of compute. That compute requires a lot of chips, and some chips work significantly better than other chips to create this enormous amount of compute needed to run these models. And so, both Doug and Ben have tremendous insights on this, and there's a couple of really good quotes here. The first is, and this is a quote from Ben: I believe that there is no practical limit to the improvements of models other than economics, and I think that that will be the real constraint in the future. It is reasonable that if we spent infinite dollars on a model, it would be improved. The problem is whether infinite dollars would make sense for a business. Sorry, that's a quote from Doug. That's also a very interesting a point that is made, which is that there's no practical end to the ability to make these models more intelligent, and also to develop different types of intelligence, as opposed to like the typical human reasoning intelligence. And this very point was illustrated in a great article written by Metacritic Capital, who basically takes a lot of these foundational AI research papers and distills them in a way that an idiot can understand, like me. I'll also put a link to this article because it was written, I think it was last week or the week before. And in this, he's basically explaining some of these foundational models, which is that with more compute, so just more compute, the models will get better. The models get better also with training information, so training data. The more training data they're able to process, the better the models will become. But really, like, the limiting factor in how good they can get is compute. And so the more compute you can build, the better the models will get. Now, there's sort of a bit of a question at the moment about whether or not the Chinese open source models are going to get to a point which is as good as the frontier models. And like I said, the constraining thing, as far as I understand it, is not having a wide contribution by different researchers. It's compute. Anyways, he has a great couple of quotes from this, but I'll read these ones. This leads us to two important takeaways. Firstly, models can get arbitrarily more intelligent with no convergence in sight. Two, making the models more intelligent will cost exponentially more. Let's double click. Although there's obviously an immense amount of work done by the AI researchers at OpenAI, Google, DeepMind, Anthropic, and DeepSeek to push the models forward, the key engine, just make the models bigger, doesn't require any God ex machina breakthrough in AI research. The no convergence is also important. We could imagine that making the hyperparameters bigger, compute FLOPs, training tokens, parameter count, could lead to declining returns to scale or even no return to scale. That's not what has been happening. So you should go and read the whole article because it's extremely well written and well researched. But it kind of makes this like very interesting point, which is that the frontier models seem to be making quite a lot of progress on the back of many of these financing shenanigans we've seen. Like they have, they're entering into these vendor financing, deals with some of the hyperscalers. They're raising a tremendous amount of equity capital, and really they're big investors who are VC, but in the most part, the hyperscalers own very large chunks of either the ownership or the economics of both ChatGPT, OpenAI and Anthropic, and its Claude models. Oh, sorry, it's Claude product, which is run on a variety of models which keep getting updated. And so that kind of seems to be leading the way, and some of these open source models kind of converge very quickly after improvements have been made at the frontier labs, and then it kind of looks like they might this might be like a recurring feature where like it's kind of like the Chinese experience all over again, in that they really don't seem to be able to come up with anything new, but they do seem to be very good at copying um, what has already been discovered elsewhere. And there's kind of going to be like like kind of like all sorts of like strange philosophical questions about maybe some of these commoditized open source models will be good enough, that they will be able to they'll be good enough for most work scenarios. So a lot of things that you want to automate and use Claude Cowork and so on for, you probably be able to do it through some of these open source models before too long. In any event, like in the first iteration of AI, like obviously the chat interfaces were extremely interesting, and they kind of sucked to begin with, and they're getting better at like an incredibly faster rate. And then many people are talking about agents for a long time in the like abstract or in the even in the philosophical sense, but Claude Cowork, certainly Claude Cowork, seems to be like actually a very tangible example, where, as Ben would say, one of the very compelling things about it is that it takes the chat LLM technology and removes the limiting factor within the technology, which is the human being. And so it is able to run like, iterations, iterations on iterations, without much compelling prompting from the human. Obviously, knowing how to prompt the models is very important, getting your parameters right, and there's all kinds of things that you need to do in the back end. Just learning about this, so bear with me. But so long as you seem to get the prompting right, and you get a lot of your parameters and source material correct, these models can kind of work by themselves. And almost in a way it feels like they're prompting you. Every time they hit a roadblock that they're not able to reason with, they kind of, ask you follow-up questions, which is like this is like a very this is like a very interesting thing now, and you can kind of see, like if you're quite adept at prompting and using these models, it's could be like the mind boggles with the kind of business opportunities for people to kind of like, take some of their knowledge in being able to put these agents to work and kind of make a business out of that. But that's neither here nor there. Um, and so, with the release of co-work and, sort of how well it's been, how broad the appeal is, certainly. The thing with Claude Code and, the legal thing, and I think they've dropped a design tool yesterday. Um, these seem to be, like kind of like verticals, different verticals that were dominated by certain companies in the past. And it's kind of like, it's so fascinating. Maybe they're just like getting agents to ship all these products, and they're just going to start like churning them out. But I guess we'll kind of have to see how that goes. Probably the other really great insight that Ben had was that he kind of like reframes the lack of no marginal costs in the terms of the death of aggregation theory, and sort of rehypothesize it as opportunity cost, and that because the limiting factor is physical compute, i.e., this compute runs on chips. Those chips are in data centers, and these are all things that need to exist in the physical world to support this digital product, intelligence. What we've been observing in the last year or so is that the hyperscalers, the frontier labs, they are all having to make decisions about where exactly they kind of like point the compute. And so in the case of Microsoft, Google, to a lesser extent, perhaps Meta, perhaps not to a lesser extent, but those type of companies which have existing large consumer businesses which can be hyper optimized by AI. Those companies are making, and even if they are hyperscalers like Microsoft, they're making the decision to kind of consume their own compute in terms of making their own products more achievable. Now, how successful they are at being that, kind of depends on who you talk to. I've yet to meet a person who hasn't kind of, told me how bad Microsoft Copilot is, etc. So, take that with a grain of salt. But at the same time, probably, like the meme at the moment is how, Meta is probably best positioned to be like one of these big AI winners, probably because of the fact that it has been a large AI winner for 4, 5, I don't know, maybe longer, maybe before the pandemic. They were also using these machine learning models to make their products better. And you need no other example than to open up your phone, fire up Instagram, and lose 3 hours of your life to the Instagram Reels death spiral. That is a product of hyper machine learning optimization, and people having a feedback loop of feeding in their own personal data for this, like kind of like magical terrible product. And so, in the case of, Google, it probably, what they're doing is, through their own models, Perplexity, etc., their investment in other frontier labs is that they're kind of like wanting to get a hold of the data that the LLMs and things like Cowork, etc., your products like that, they want to like take this data back and this ability and compute back and like redeploy it into search and into YouTube and into a variety of their other products, and kind of like turbocharge them. So it doesn't really, it's not like the end of the world if you don't make money. If search is like, it kind of almost feels like a tobacco type thing where maybe like the overall search queries kind of like move off of Google search, but the the AI makes it so much better that like the cost the cost of advertising kind of goes up. I don't know, but that seems to be the direction they're going. And then certainly with the release of some of these products, the frontier labs seem to be heavily, taking their whatever available compute they have and aiming it at some of these co-work products. And there's like it's pretty stunning what people have been able to do, how productive a single person can be. You know, before I left my last job working in sales for a software company, yeah, even what the senior software engineers were able to do with like 22, 23, 24 tier, chat GPT in terms of coding was absolutely remarkable. And I'm sure I'd be like, every time I talk to some of my old colleagues, it kind of gets, crazier and crazier. Like a lot of people I talk to, like their primary job now is basically like managing, some kind of agentic coding, and acting as like a manager, quality assurance, so on, and kind of like refining the workflows. Kind of like the job of software engineers. Changed forever, maybe. So it's pretty stunning. There was a couple of so that's kind of like, at the top end. The company that I've been most familiar with over the years has been Amazon, and they kind of contrast a little bit with what all the other hyperscalers are doing in the fact that it seems like most of their compute resources, certainly the AI business, the additional compute resources that are being allocated to the AI business those are being aimed at their existing customers. Sorry, third party customers instead of necessarily being focused at their own consumer facing businesses, which is it's a very Amazon 2.0 thing to do. If you think about a lot of their businesses, certainly since the late 2010s, 2018 or so on, a lot of the things they do, and even the way that they've pivoted their traditional retail business has been, making their infrastructure and resources available to third parties to take advantage of. So that's the third party marketplace, that's advertising, and AWS is a intrinsically infrastructure business. The first iterations of letting people run compute in the cloud, um, that is not that is not a business aimed at retail shoppers. That's a business initially aimed um, at startups. Allowing startups to have a variable cost structure when they start, um, their startup software business. And so now on the top end, like kind of the other interesting, observation I'd have about them, or it's not my observation, a lot of other people have noted this before me, but it's that AWS started as a way for smaller software companies to kind of get to market much quicker without needing to have physical servers or rent local servers. They could, if they went to like an AWS event, they could get some free vouchers and kind of, away you go. And then even at the start, you just have a very basic offering and it wouldn't be enormously costly. And sort of as they've, as some of those startups became enterprises, the development pipeline and certainly the different products they offer within AWS, over time came to support enterprise customers. The nice thing about enterprise customers is that they have big budgets and very willing to pay money for time saving and convenience and all the good things that come with servicing customers with big budgets. And so that's kind of like where it seems to be that's kind of like the direction in which their own AI business within AWS is headed, seem to be offering a lot of these very high-end services, which could only be aimed at the enterprise. Kind of blanking now on one of the programs, but it's almost like $100,000 per seat type product. So that's kind of where they're at with it. And so even at the hyperscaler level, they all have different kind of visions for what they're going to use their compute resources on, and then the frontier labs are kind of the ones at the consumer coalface, and they're pivoting. Like they're rolling out new products, and when they hit, they're kind of going all in on the next thing. Certainly, the agent stuff is sort of like stunning, and um, the pure capabilities are kind of amazing. The the rollout of agents, it's not exactly coinciding, but it is sort of, happening at the same time where a lot of large technology companies are massively cutting back their workforce. Buko Capital on Twitter, he wrote a great article this week, which was talking about the realities, being faced with a lot of these companies, and with the prospect of AI. And he used Jack Dorsey as an example. I think Jack fired some enormous number of Block employees, formerly Square, this over the last couple of weeks. And I think Buko's takeaway was that that was a good move, as opposed to someone like Meta, who seems to be like firing 10,000 people, every couple of weeks. They're kind of like bleeding it off. There's a couple of great other articles that have been written. There was one by friend of Buyback Capital, Dan Nolan, and the title of the article was, "You don't need to be worried about your current job. You need to be worried about your next job." Um, and so it's kind of like the dichotomy of the white collar workforce at the moment, where existing companies are it's undeniable that they are deriving internal efficiencies from these products, and it's been happening for a while. So like the first entrance was code, and then obviously as these co-work, pilot co-work whatever models have come along, they're making a lot of white collar, quote unquote email jobs so much more efficient. And a lot of the game theory with this is that probably large corporations, where they're not doing mass layoffs, they are probably not replacing existing workers when they decide to leave for another job, or leave or get fired, whatever. Because there's so much efficiency gains to be had, and certainly as these products come out into voice, into text, maybe even video, like a lot of these white collar jobs that revolve around sending emails, talking to people on the phone, getting in Zoom meetings, following up, project coordination, etc. It's pretty hard to see how like a lot of these are not going to be, there's going to be just a ton more automation. And for those people who stay, it's really an open question about, is there going to be pressure down on wages? Certainly the number of people, and I think this is just an observable fact, the number of employees at many white collar, knowledge, internet, software, consulting, you name it, those employees in existing firms are going to go down. And that, at least initially, like a lot of these companies have coverage to do this. If Microsoft's doing it, everyone's doing it. And so they're going to take this opportunity to, alleviate their cost structure. In the case of some of these very large companies, over the last 3 or 4 years, a lot of them have raised prices on some of their existing legacy businesses with the intent of taking those cost savings and investing all of it, and then more, into compute, into AI, you name it. So this is kind of like the central idea of what Citrini's article was about as well. The 2028 article, which was, he's got a very doom. like it was an interesting article that had a thesis, and whether or not he completely believes in it or not is neither here nor there. It's painting like one of the worst outcomes, which is basically that society gets stuck in a doom loop where labor, traditional white collar labor, gets displaced by artificial intelligence. Those people who are displaced don't have anywhere to go for the most part. Some of them probably end up in some of these industries which are going to find it difficult to be disrupted by AI at the beginning. So you can think of that as like traditional blue collar work, service jobs, the gig economy, and so on, or at least until those things are disrupted themselves by things like robots and automated driving. I don't know, drone delivery and stuff like that. And so as people are permanently shunted out of these very high paying white collar jobs, they get stuck in a cycle where they're no longer able to earn the incomes that they once owned. So Trini's main thesis for this was that a lot of, and this is not too dissimilar from what Doug was saying, but it's based on an interpretation of consumer agents. So this is kind of the understanding that everyone is going to have their own personal agent who basically has infinite capacity, infinite compute, has the ability to go and negotiate the absolute lowest price without any concern for time, constantly throughout the economy. So instead of something like a booking.com being useful to a human being because it brings a whole bunch of information together and allows a person to quickly contextualize against options, you'll just be able to tell your agent that please find me if you prompt it correctly, it will be able to go out there and find you exactly what you want in the price range that you want at the lowest price at the best convenience, because you prompted it correctly. And then this like agent maxing new consumer economy will break up a whole bunch of networks that basically only exist because human beings, rely on some of these conveniences. The paramount example would be, and I think this is a bit far-fetched, but this example was basically that the existing card payment rails operated by Visa and MasterCard would be completely disintermediated because the agents will go and look for the things with the cheapest transaction costs. And because they'll be able to, get at any supplier directly, these agents will then start insisting on, L2 Solana protocols, which, take 0.1% per transaction as opposed to, the typical credit card and interchange network, which, might take as much as 3% charged to the merchant. Now, I'm not sure if I believe in the agent, like a consumer agent, maxi type, understanding of things. It's certainly not observable now. And to be fair, there's like quite a lot of ways in which you can already automate your consumption. That's like kind of like the whole subscription economy. But even things like recurring orders from your grocery and etc. So I'm not sure I believe in a future exactly where a lot of these like digital networks, payment networks, etc. are disintermediated. Certainly not with the technology that we've got now. The the front facing, even co-work, it is heavily dependent on someone being incredibly skilled and thoughtful in in how they prompt the machine. And at the end of the day, if a human being has to start prompting something, we revert to convenience, to ease, to people providing us with things that we want without us having to tell us that they want it. And so perhaps eventually, we do get there. I think that's kind of verging on, the complete lack of scarcity future, that like Elon Musk and Jack Dorsey, etc., would talk about, where there's just infinite compute capacity, our ability to communicate with that compute is perfect, and it's able to like kind of anticipate our every want and desire, and it's also able to provide the labor to construct that kind of thing. And so we're not anywhere near there, I would say. But having said that, the rate at which the existing models, etc., are improving is spectacular, and the product innovation is amazing, literally unthinkable before the before the pandemic. And so so you've got kind of like Citrini's like maximum doom thing, and this world of infinite giga compute and chatbots being able to anticipate our every desire and also have infinite ability to rewire the economy on their own. That's kind of like one kind of extreme that people are on, and then you know uh, Doug Doug O'Loughlin also wrote this great um, article called the Engels Pause, which is people are looking for all kinds of historical narratives through which to understand both the capex cycle that we're going through and the ostensibly the productivity gains that are going to the automation of productivity that is going to displace so much, at least initially, white collar labor. If it's already displacing it, so it's kind of factual. And so, the Engels pause was basically a way to describe, late to mid 19th the late to mid 19th century economy from the 1940s until about the start of the Gilded Age, at which point a lot of artisans, a lot of craftsmen, these type of people were displaced by machines. And at the same time that this new technology was empowering new jobs, so people who were able to build, manufacture the machines, take care of the machines, were able to create new machines because of productivity gains that the new machines were making. Those people kind of were did very well, but they were a much smaller cohort as compared to the displaced labor. So people who were in traditionally quite high paid artisan and physical manufacturing jobs. Um, and so he was kind of positing that this is kind of the environment that we're in now. Is that obviously there are going to be people who make a fortune from these type of things, and it's not just as if they're working. These aren't just the people working at Anthropic or at Anthropic or OpenAI. There will likely be, if there aren't already, people who are very skillful at marketing, some of these efficiency gains and taking them uh, to new companies and making those businesses more efficient, i.e., kind of being the catalyst to displace a lot of white collar labor. And so it's kind of like it's almost like a Hunger Games type situation where if you don't, if you're not at the forefront of this stuff internally at your existing job, you might be at the effect of it, and be like turfed out. Um, on the other side, I mentioned Dan's work, which was basically that because these at least some of the compute is pretty accessible. You can get Claude Max for $100 per month, $150 per month, something like that. Obviously, you can even these models are at the top end they have consumption limits. So if they don't cap your consumption, they're you're going to get charged through the nose for perceived excess consumption. There will be opportunities for small teams of people to take advantage of these tremendous productivity gains and chip away at small pieces of existing businesses. So that's kind of like like the bullish, like this technology is going to enable people kind of thing. But at the same time, the opposite narrative in terms of this productivity is that the most amount of compute and the most amount of productivity gains is going to accrue to the people who have the most compute. And they're going to do that to kind of disrupt other businesses. And so, that's kind of been, that's kind of been like Anthropic's story so far. Claude, you know, obviously started with an LLM, and then it's, they're rolling out new products, every month, every couple of weeks. Um, and, some of them are going to be like really, really good. And so, there's a top-down version of this where those companies which were almost, they had verticals, they will be able to compete across verticals. And because they've got the most compute, maybe they will be able to get to the best product very quickly. And then at the bottom, there'll also be people who will be able to make, interesting vertical entrances at the bottom and, perhaps chip off a vertical. So that's kind of like, whether or not we see that is, which version of that is more true is yet to be seen. But I think we're probably seeing a bit of both. Like the eternal question is, the eternal investing question is which of the, of the existing businesses that people seem to be investing in, where are the opportunities, which ones aren't going to be disrupted. Those are incredibly difficult questions, and I'm not sure anyone has a very good answer on any of them. Uh, Suffice to say, there's probably like a couple of quick um, like rules of thumb. You could probably see, I think the at least the OpEx line of a lot of quote unquote quality businesses with good existing moats, those are going to go down. The I think that's just a fact. It's going to become it's fact. It's baked in. It's happening right now. The other question is just going to be of these historically deep moated companies, which ones continue, simply because some of these moats, some moats are the product of human recognition, right? Like someone just recognizes something in your brand or in you or in your company or in your product, for whatever reason. And perhaps the base of that is you've got some kind of network effect. Again, Citrini would argue that these networks are just like the cause of friction and people being lazy and consumer and human consumer behavior being what it is, not always completely rational. There are time saving and efficiency questions with a lot of these. And the other one is like being able to provide some kind of scale, cost, the scale economy shared type idea. You get into a recursively good competitive position because you're able to return consumer surpluses to people because of your scale. It's kind of like the two big competitive advantages that seem to get businesses to very big, to very large scale. And so the question is really going to be like, you know, if you've got just an enormous amount of productivity, like you're controlling some of these models, you're controlling some of this compute, you've got this massive cannon, you know, if the computer productivity gains get so good, it's like maybe you can shorten what would be a 50-year development window for a certain business, right? Maybe you can get that down. You can get that down to like 3 years, You can, you can unleash an army of agents to accrue this data and spend a bunch of money because you think you can get there very quickly. And it's like a very, very bad answer, but it's like probably just going to depend. And there's going to be like a lot of financial incentives. Like the incentives in a lot of these businesses are really going to matter. So if you are built on a win-win-win-win-win, where kind of everyone in your ecosystem is winning and is accruing some kind of benefit, maybe you can continue on with that. If you're one of these businesses that's kind of like stuck in a, like is absolutely demolishing one element of your network to benefit three, four other sides of your network, maybe, there's a way in there. There's a way in for these lower cost products to, they at least they can start off lower cost. So probably the rate at which competition emerges in many old moated businesses, especially those which are not in the real, are not based in real world infrastructure, are going to have continual questions. That's the other thing, is that none of this is slowing down. If you've got some software vertical, um, it looks like Anthropic's coming for you. They're going to come for you. And if Anthropic's not coming for you, then like six guys with an Anthropic license, with like a enterprise Anthropic, sorry, an enterprise Claude plan, they might be coming for you. And so if you're not, like a very easy rule of thumb is like if the AI strategy is bad or seems, like there's not really a management team who's able to, have some kind of cogent strategy with the new technology, it feels like that is a very bad place to be in. You're not going to be able to coast around, like some of these old school managements, which sort of like stuck in the past, stuck in the decades long moat and so on. If they don't use this technology, someone else will, and probably the rate at which a emergent competitor will be able to compete with at least network businesses at the start feels greater. Um, I'm struck by that example of, a guy and his brother and their cousin in California who scaled a GLP-1 reseller using Claude to like billions of dollars in sales in I think it was like 18 months. So it's probably like a, you know, not a great example, but I mean it is it, people were talking a couple of years ago that we were going to see like the first billion-dollar company with one employee. And have seen a company do $1 billion in sales with three already. Yeah. So these are difficult questions. But um, like it's an incredibly interesting time. I think probably the other really interesting mental model as a dyed in the wool value investor, quality growth, whatever you want to call it. Cliff Sosen, he had a great tweet the other day, which is basically that, like a big black hole has emerged um, in the land of publicly traded businesses. And it's undoubtedly already had an effect. Perhaps it sucked a few existing businesses down into the black hole. And it appears that the black hole is getting bigger and it's getting more vertical and it's getting denser. And it seems to be you know, sucking the software businesses in first. Where, it'll only be proven many years after the fact, how impactful it was to every different kind of software business. I'm sure some will probably be made better by this. Some feel almost dead in the water already. Um, and so, his observation was that this black hole's emerged, businesses are falling into it, and like the normal human reaction is, kind of to reflexively look at things that have gone down a lot and say that that's where the opportunities are. And the opportunities seem to be quote unquote emerging around where the black hole is. And his kind of you know snarky lead off on that was that he's happy that his the businesses that he owns are far away from the black hole. And this is kind of a long term value quality trope, which is um, you know looking for very consistent businesses that are immune from um, technological change for whatever reason. It just appears that like those companies that were ostensibly, disrupting the real economy for 15 years are themselves now at the brunt of being disrupted themselves, and that those businesses that have survived in the real world are probably the furthest away from being affected this time around. And so again, it's always the Jeff Bezos, what's not going to change type ideas, and you know every time there's one of these panic sell-offs, I'm kind of reminded of that wisdom. Although it seems to be getting harder and harder to find those parts of the economy that are not going to be affected by this. Obviously, those things which find their competitive advantage in some kind of physical infrastructure, physical assets, seem at further away from the black hole than other things, and actually that's kind of been like a successful trope for the last eight months or so. Physical infrastructure, specifically physical infrastructure, has been seems to be doing the best. So we're going to see. Anyways, that's that's Friday Sharpeners. We'll see how it goes next week.